And hope you are well. In today's video, we are going to talk about inverse fair value gaps. What exactly is an inverse fair value gap? How inverse fair value gaps differs from standard fair value gaps, and I'm going to show you a step-by-step guide to trading inverse fair value gaps. Plus, I'm going to show you a tool you can use to make this easier for you. All right, so let's get straight into the video. Alright, so what is an inverse fair value gap? Now, an inverse fair value gap is basically a normal fair value gap that has not been respected. Price breaks through the fair value gap and then it becomes an inverse fair value gap. So let me show you an example. So basically, if this is your fair value gap, so there needs to be a gap between your first and your third candle. So the candle in the middle, the price must not be closed. There needs to be a gap. So what happens with an inverse fair value gap, if price comes back and does not respect this level, price will break through the inverse fair value gap, and that is where you will enter your trade. You won't enter only just on inverse fair value gaps. You need to have a plan. And in today's video, I'm going to show you an easy way how to identify it, how to do it manually, and how to use the Flux Chart Price Action Toolkit. Link is in the description if you want to check it out. How you can use that to make it a little bit easier for you, and we are going to go over a few chart examples. All right, so let's get straight to the video. All right, so basically an inverse fair value gap, like I explained in the intro, is a normal fair value gap that has not been respected. So if you look at example on this little piece of price action here, you can see the last fair value gap that was created was this one here. See, there's a fair value gap. There's a gap between the first and the third candle. Now, price did not respect this fair value gap as price broke out. So it disrespected, so this fair value gap become an inverse fair value gap, and as you can see, price retraced and then moved away. If you extend this inverse fair value gap, broke through, came back for the retest, and then price made the move. Same here, if you go to this swing high right over here, you will see there is a last fair value gap that was created right over there. Price did not respect it. This candle broke out of this fair value gap, so it becomes an inverse fair value gap. We had a retest and we had our move down, and as you can see, price tested this level a few times before price went up again as well. If you can see here, the same level, inverse fair value gap, is a nice level, broke through, came back for the retest, and we continued further. So that is an inverse fair value gap. Normal fair value gap that has not been respected, and also when it's not been respected, it becomes a inverse fair value gap. Now, let's go back to this example. Like you see, to make sure this inverse fair value gap is more likely to hold, you need to take it into confluences. You need to have confluence for your trading setup. First of all, we had a nice bullish engulfing here at the swing low. We pushed up, market came back. We created liquidity right over here. Created liquidity, we can even draw our fib from this low to this high. As you can see, this inverse fair value gap is at this in the 6176.8 level. That's our golden OTE zone. We entered right over there on the retest of the fair value gap, and then we can target our most recent high. That will be there. And you can see the price played out beautifully. So you need to use it with confluence. So now you got the simple way of doing it manually. Let's go. Let me show you this tool that can help you use it as well with Flux Charts, the Price Action Toolkit. All right, so the first thing you want to do, you want to type in Flux Charts Price Action Toolkit. If you don't have it, please go, link is in the description of this video. Go have a look and then you can check it out for yourself. All right, so let's open this indicator. As you can see, this is an all-in-one price action toolkit. It is a paid indicator, but this helps me a lot by simplifying my trading and taking all the noise out of it as well. You got order blocks, you got fair value gaps, you got inverse fair value gaps, you got market structure shift, breaker blocks, liquidity grabs. Everything is inside of this indicator. For this video, I'm going to enable the inverse fair value gaps so that we can see how it works. You can play around with the settings right over here. The higher it is, the more inverse fair value gaps it shows. The lower it is, the less it shows. So let's have a look here quickly. There we go. So as you can see in this example, we are on the 15-minute US 30, and this indicator drew out this inverse fair value gap. As you can see here, you can use it with your own trading confluence. Liquidity has been created and taken here. Price broke through. We had a market structure shift. The indicator pulled out the inverse fair value gap, and let's see if we get tapped in. There we go. You see we have a nice rejection. Let's see if we draw our fib from this high to this low. We are at the 61 level and we can target our next low right over here and stop loss above this high. And there you go. As you can see, we got stopped out and then price created another inverse fair value gap. All right, so here you can see we created a low right over here. We had a nice big push up. We took out Asia highs. We can draw our fib from this low to this high. And we can wait for price to come here. As you can see, there's a nice order block level here as well. So let's play price bar for bar and see what happens. We created a bearish one. We're not looking for a bearish one because we need this buy. So we're currently in the 91 level. If price is going to take out this low, then we know price wants to move downwards. New York session has just started. There we go. We created our fair value gap. So now we need to wait for price to come and retrace to this level. Let's see what happens. There we go. We got tapped in. And now what we can do, we can enter our trade and we can target our next level of liquidity. Let's have a look. There we go. And it was a beautiful trade. And then again, this inverse fair value gap was created here. We took out this highs and now you can just follow the price. Let's see where price went. Took out this the previous day's New York session highs. Let's quickly play price forward and see what happens. All right, so let's quickly draw our fib from this low to this high. I would like to start entering buy trades if we enter this area here. If we look at the structure, these lows was created. These lows did not take them out. So I'm waiting for lows to come to this level. There we go, basically at the 61. So now I'm going to start looking for inverse fair value gaps. You see there's a bunch created, price is respecting it. Another one created. Another one created. Price is respecting it. There we go. And there we are at current price. So I would like to see these highs being taken out. All right. So that's how you can use the inverse fair value gap. Please go have a look. The link is in the description. Flux Charts Price Action Toolkit. All right. Hope this video helps you a lot, and then I'll see you in the next video. Cheers.